What's up, everybody? In this video, I want to go over why risk management is very, very important. And I want to be honest with you guys and go over my struggles this week. I want to go over some bad trades. I want to go over some good trades. And I want you all to get in my head so you can understand where I'm at with my trading, what I'm doing right, and what I'm not doing so good with. Before we get into it, I recommend everybody watching this, if you have not already followed me on my Instagram, at Entrepreneurship, I will post a link in the description below. This is my only account. It's a really good resource. I post daily trading tips, tricks, and I also post recaps pretty much on a daily basis going over my trades and setups that I am watching. The link is in the description below. You're missing out if you're not following it. But this week, to start April, if I had to be completely honest with you guys, I was not trading very well. I think my execution was pretty shitty, and I was struggling to find high quality setups. Now, one thing I will say, since I have been trading for many years now, is that I do not take large losing trades. It's out of my vocabulary, and every single loss that I do take is planned accordingly, and I accept the risk before I put the trade on. So if you're watching this video and you still take big losing trades, please start implementing proper risk management. I can lose 3, 4, 5 times, and as long as my losses are small, the wins will take care of themselves, like we're going to see this week, because on Thursday, April 6th, my one winning trade took care of all the losing trades that I took this week. So I'm going to get into the VIX, which is the volatility index. However, if you've seen my previous video, I was explaining how I look to trade this week. Because of how low the VIX is, and it's pretty much dead, the volatility in the S&P 500 has not been very existent. Now, because of this, we must adapt and trade differently. And I think that's something that I struggled with this week, not being able to adapt to what's currently working and the current conditions of lower volatility. How I was trading 2-3 weeks ago with my entries was easier to read and easier to feel the market, whereas this week I had a hard time doing so. So I struggled to read the market properly, and I struggled to execute my trades and find good entry points. I did very well in getting the direction of the market correct. For example, when we sold off of supply, I knew we were going to come down. When we bounced off demand, I knew we were going to rally. So the direction of the market I was correct on. However, for my intraday trades when I'm scalping, and I'm going to show you, I took one trade, was a $1,600 loss on April 5th, which was Wednesday. And then another trade was a $560 loser. So my losses are small. My entries have been lacking, although I've been getting stopped out, and the market has been moving in my direction after the fact. So this ties into struggling with reading the market properly, getting a feel. A large portion of my trading is a feel aspect, feeling what the market is providing me and being able to read it properly and comprehend the context. Then on Thursday, April 6th, the markets closed on Friday, the following day. I took an $11,600 profit, and this one win outweighed all the losing trades to start the week, and it also got me out of my own head. And all it takes is one trade to get you back on track, because when you feel like it's going to be a good setup and you get a high quality one with all your confirmation signals, you swing and you take that trade and you put risk on. You don't look at the past. I didn't wake up today and say, okay, I'm having a really shitty week. I'm not going to trade today, or I'm going to step out here. I say, okay, let me see if there's a high quality setup. And if I take it, I will see it. So I'm going to make it as simple as possible. Let's go over the pre-market plan. This is what I post in the Discord of setups I'm watching, levels I'm looking out for, and potential trading scenarios. I want to show you this before I show you my entry so you can understand the context of the market. As I just mentioned, do not think about the past, what you did yesterday, what you did 2 days ago. That's over with. Forget about it and focus on the present moment, because the past is irrelevant for what the market is giving you right now. That's a very key point I want to make for this. A lot of people think about the past, they struggle with the past, and they let it affect the present moment. If I woke up today saying, oh, I'm not doing so good this week, let me not trade, I would have never taken this trade, and I would have never profited $11,600. So in the plan, the most important levels for me today was 41.35 to 41.45, which is this pink box above, and also VIX at 21.20. Now, if we go to a VIX chart, and again, I do not use this very often in my analysis. However, it was vital in the trade that I took today on Thursday on why I took the market long. So what you're going to notice here on my charts is a key level at 21.20. Ever since Monday, we've rejected this level once, Tuesday, a second time, Wednesday a third time, and VIX has sold off from this level. Now, what this tells me is if I zoom out on an S&P 500 chart, we are going to see any downside move fail to find continuation if the VIX is not breaking out above its key level. Again, this was vital to my analysis today. Why this is important was because to the downside, scenario number 3 was I do not want to get caught on a short side continuation if VIX is not above 2120, which means I do not want to play the market short if VIX could not get above 2120, to make that as simple as possible. Now, the reason for this was today the market opened up. We broke below yesterday, Wednesday, the 5th of April's lows, yet VIX was nowhere near the 2120 key level, and it was nowhere near the high a day where it should have been if VIX or if the S&P was breaking below its previous day low. So that's why scenario number 3 was I do not want to get caught short on a breakdown if VIX is not above its key level. Any downside continuation move will be short-lived, especially if ES or SPY is above 4,100 to 4090, which is this lower green box down here. If sellers can become trapped, this can offer a possible reversal setup. So what you're going to see here is the market breaks below the previous day low, and we're inside an area of demand that the VIX has not broken the high yet. This is indicating a possible short-term reversal, as I mentioned in the pre-market plan. So the market sells off, breaks the low. In the intraday commentary tab, I said there's very little activity below yesterday's low. If we can close above 4,100 by 10:30 Eastern, longs are in the picture, targeting 4,015 first, then 4,035. This is setting up to be a bear trap if there's no downside follow through. Now, if I replay bookmap here, what you're going to see at 4,100 to 41 or 4,099 is you're going to see very large aggressive sell orders sweep the market, come lower into the whole number. You're going to see a very large passive bid step in, and then again you're going to see the market sell off, and immediately it gets bought up. So number 1, if there's no downside follow through and the market starts moving up, these shorts are going to have to cover. And number 2, the selling is going to dry up. And number 3, if buyers step in, it's just going to cause these shorts to squeeze the market higher and fuel an upside rally. So I'm seeing all this aggressive selling, but it's also being met with very, very strong buying. And watch what happens here. The market starts moving up. This was my entry right here. As soon as the market started to come up back above 4,100 bucks at 944 is when I entered 5 contracts of this trade. The market is having a very, very difficult time. We keep breaking the low, putting in lower lows, lower highs, but there's no downside follow through. Then the market again finds aggression, and at this point I have pretty high confidence that if we can hold above 4,100 bucks and more aggression comes in, the market is going to have a very strong rally to the upside because of all the factors that I have mentioned so far in this recap. This is what it looks like on a chart. We break the previous low, we bounce. We break the previous low, we start moving higher. We pull back, and then aggression starts coming in. Now at 10:10 Eastern, when the market looked like this, I did something that I normally do not do. I added to my position 5 more contracts. I liked how we were consolidating near the high. I liked the action we saw on the tape at the low, and I liked the aggression as the market started coming up. And at this point, VIX started selling off nowhere near that key level, indicating a possible reversal to the upside, especially with that key level of supply. I would expect the market to gravitate towards and act like a magnet. So now I'm in 10 contracts of the E-mini. It's not crazy large size. It's not small size either. But because I did average up, my average price started to move up, so I could not keep my stop loss below 4,090. I had to raise it back up, and at this point, I'm raising it to 4,100 because this is the activity that we saw before the market bounced up. Now at 10:29, when the market looked just like this, I said there's still bullish flows in the market at 4107. Pullbacks should get bought up as long as we remain above 4,100. If anyone is still in long, I'm looking to target 4120 next, And if we could get above 4120, 4135 will be a great final target. Now, to top this off, why I even had more confidence was, if you're watching the tape, you could even look at this on a normal time in sales. We were seeing very large orders sweeping the sell side, meaning very aggressive sell blocks coming in, taking a bunch of liquidity away from the market, yet the market wasn't selling off. There's one example, there's another example, and then we have examples pretty much all throughout the day. Another example right here, and I could keep going down the list. Another one right here. So we're seeing all this large selling activity, another one right there, yet the market is not selling off. We're remaining above 4,100. A pullback should not scare you. If you manage that trade correctly, the market can't go moon straight shot up to your target all the time. You're going to have pullbacks and you're going to have periods of consolidation. As long as you adjust your stop loss correctly and manage that trade correctly, a drawdown is normal and you should not be so scared of one. Now, I don't know what it was about those selling orders taking tons of liquidity away from the market, but we just were not moving lower. And the last time we saw this was on March 29th. If you want to go back and review the tape, the market rallied that day and the day after. So that kind of just helped me with this context that, okay, I saw this last week and the reaction from this last week was bullish. So let me anticipate the same thing. No reason to change my thoughts because everything is leaning towards the bull side. And then we got that strong rally up. I sold 5 of my contracts of my 10 as soon as we came into the 4120 target, and I had 5 contracts remaining. I now adjust my stop loss back up to 4,108, which was VWAP at this point. And all afternoon, I was not even at my office. I had an order ready to go to stop me out if 4,008 triggered. And I kept holding this position until 4135, and I got out as the market started moving lower at 239 for an $11,600 profit. When we hit the 4135 level and started moving lower is where I got out of this position when I got the alert. Came into 4135 pretty perfectly. And I mean, you could have shorted this, but I did not. I just used this as an area to take profit. And next week is going to be very, very interesting, but it was very good to use VIX to top off this analysis that gave me high quality conviction of the short setup. So the main points of this video is, do not look at the past. This week was not the best week execution wise. Strategy and trend and direction was excellent. I had a very good time picking the direction of the market, but my entries lacked and the downside or upside follow through also lacked besides Friday. One trade could make up 5 or 6 trades that you may take. Never get discouraged and get out of your own head. You are your greatest enemy, and this week I truly felt like my greatest enemy, and if you could snap out of that, you will trade much better. So I'm going to end it on that note. I hope you all enjoy. This was like an impromptu trade recap video. Did not even plan on doing this, but the action today was very nice, and I wanted to go over my struggles and I wanted to go over my successes. If you have any questions, comment them below. Appreciate a like on this video, and definitely check out the links in the description below. But peace out.